Let's talk about Amazon. Just reported earnings, stock symbol AMZN. The stock here, again, beats earnings like Apple, but then it's slipping after hours. Now, we're not seeing the same kind of slippage that we saw with Apple, but it's still a little bit of a surprise, I think, for a lot of people. I think a lot of people were, after the Microsoft and Meta earnings, were expecting big things out of Amazon. Clearly, they were expecting it with just the way that it reacted today to those earnings reports from yesterday. But nonetheless, with it being up 3.1% on the day, post-market, it's trading only up about 0.75%. So it's given up a huge chunk of those gains. So what I want to do in this video here is go over this chart, go over the technical analysis, and see what we can deduct from the charts about future direction and what to expect going forward. So let's point out, first of all, this is most obvious. This is the downtrend off of the all-time highs. Now, what makes this downtrend so interesting, and I've seen this on a lot of charts here today and yesterday, is that we've broken a lot of these downtrends, and while it broke above it, it has since pulled back to the downtrend and acted as support. And that'll oftentimes happen when you break through a resistance level. That resistance level will flip to be in support, and that's what you have here with this declining resistance. You don't want to keep, if you're looking at it from a long standpoint, you don't want to keep having it test that support level because the support level is dropping. So the more times it's dropping, the more likely you're going to be much further in the red than if it was not testing it. So it tested it yesterday, tested it in the after hours here on the earnings, and it's held it so far. So I think that's a positive development. Also, this red line here, that's your 50-day moving average. Now, it seems like it's having a little bit of an issue there today because it did test it, but it couldn't break through it during the regular trading hours. Now, in the after hours, it popped up right up to it and couldn't break through it again either. So you have that overhang as well. You have an ascending triangle pattern in the very near term. And this little ascending triangle pattern doesn't look too bad. Let's go ahead and put it back on regular hours. This is what we're looking at going into tomorrow. So if the bulls can muster it up, get back on above this 5-day moving average, which is this yellow squiggly line, get back above that, then attack this other yellow line as price level resistance. And you have like essentially you have an ascending triangle pattern there where you have where you have higher lows, but you have a flat price level resistance overhead, preventing much more of a move. So as this area is getting tighter and tighter and coiling, you're going to see a potential break either higher or lower. Most of the time they break to the upside. That's why they're considered bullish. But you can see where post earnings, we've been testing that support level as well. Heavy volume, which is what you expect with earnings. Now, another thing that I found pretty interesting, and we're going to throw on some Fibonacci's on this chart. So we're going to tie it again to the same level that we were talking about before here from the all-time highs. And you're going from about 241 all the way down to 161. Now, with Fibonacci retracements, it comes in increments of traditionally 38.2, 50%, and 61.8. Right now, you see it testing this 38.2%. It's right there on it. This resistance right there on it as well. So there's some key resistance at this level that it's dealing with, trying to break through it, and yet to do so. It sets up a potential scenario where that 38.2% does reject price and send the stock much lower going forward. That's another thing you want to be careful of, because when we are having these dead cat bounces, they tend to go back to some of these Fibonacci key levels like the 38.2 or the 50%, or in some very aggressive dead cat bounces, you might get up to the 61.8% level way up here. Looking at it from a weekly chart, and we'll go ahead and take off the Fibonacci's here just to make it look not so convoluted. And what you have is a huge support level going all the way across. This goes back to late 2023. And so you can see it on the daily chart as well. It has it right there going all the way across. In fact, might want to give it just like a little blue line here just so it doesn't get mixed up with those other yellow lines. But yeah, you got a strong support level going all the way across. You can see it on the weekly as well. If we get another downside move that takes it back down to 163 and that breaks, you really start opening the floodgates for something much bigger to happen on Amazon, and that would likely take us down to a potential landing spot of around 91. But again, if that's going to happen, you're going into a full-blown recession in the broader market, or something has to fundamentally change with the Amazon company as a whole that would just send shockwaves through the company, because you're talking about losing 50% of its value from here. I don't see that happening in the near term. If you have a much bigger, broader market recession, yes, that definitely becomes possible, but it's not in the here or now. When it comes to stocks like Amazon, do you go ahead and just buy the dip immediately? There's a good chance, I think, with Amazon that you could see the dip buyers step in early on tomorrow and try to ride it back up to break even. There's even a chance that that happens with Apple. These mega cap stocks, they're very much driven by especially on the retail side, by the FOMO traders, the people who are just desperate to get in at any price. So they see it drop 5 or 10%, they feel the need to have to get into it. You take a stock like Eli Lilly, which isn't as FOMO driven. This stock dropped 11% today, and you never really saw any hint of dip buying in it, like what you're normally used to seeing when a mega cap stock like Apple or Amazon reports earnings that aren't well received by the street. So be careful out there. You don't want to necessarily, overexpose yourself to these trades. Like I say, I enjoy waiting a few days for the stock to settle down and then try to make my trade from there. There's some definite upside opportunities if this stock can recover from that ascending triangle that I pointed out, but also some potential traps that you want to be aware of as well if it doesn't work out that way. If you enjoyed this video, I'd encourage you to like and subscribe. Let me know down in the comments below. Did you hold Amazon through earnings, and how did you do? Obviously not too great, but how are you handling it? How are you reacting to it? And if not, are you looking to buy it going forward? Let me know in the comments. Thank you guys, and God bless.